This is Broke Money Hustle. And now, here's Broke Money Hustle with Trico and Eric.
It's not Monday, and it's not Saturday. It's Tuesday, but we're doing a little special episode because yesterday we kind of had a special episode where TJ wasn't able to be with us. So my buddy Ryan, who is an Acorns expert, really kind of schooled us and filled us in on his side hustles and all the things he does with Acorns. He did the IRA, the Acorns spend account with the tungsten debit card, and then of course the investment account. Plus he also steals garbage and sells it on the Facebook Marketplace. So check out Monday's episode. It was really entertaining and very informative. But we needed to talk market, and we needed to talk our stocks and our Robinhood accounts and vis-a-vis where our investments are at. And my buddy TJ, co-host, is here. And how you doing, man?
Doing good. I'm glad to be back, man. I had a little bit of issues and everything yesterday, so I couldn't make it. But, glad to be back on the show, and we could do like a special episode today.
Yeah, we really need to get into our date Mary kills that we set up from last week and kind of check in first and see where we're at. My biggest date was Denny's, and I'm, it's as disappointing as a Denny's steak right now. $11.80 a share. So far, I've lost $6.60 on the 3 shares. It was up this morning. Of course, the entire market was really up this morning. I was hoping it would last, but we kind of petered out and things went back to the new normal, and it just kind of settled. If you look at the chart, it's just like a slide. It's like starts up really high and then just whatever.
Especially the pre-market this morning, and kind of a little bit throughout the day, I'm like, all right, I'm getting back to not losing any money. And then it kind of petered out. I'm like, still better than last week. So I guess that's a win in my book. I'm of course, I'm still going to be very bullish on Ford. Ford is doing really well. Mm-hmm. I couldn't be happier with it. $6.54. I bought in at just under $5. So my, it's a 6.46% gain on my total return. It's been great. So I'm just going to keep, every time there's payday, I get a little bit here, a little bit there. Just going to keep shoveling money into Ford. And Ford's showing a 9.29 dividend yield, so that'll be pretty sweet. Like a nice quarterly dividend for you. Yeah,
if I can get my my total value and that I have in Ford right now is about $250.
Nice.
So I think my goal by year's end would maybe to at least get that up to 1,000. I think I'd be sitting at right around 120 shares maybe. Mm-hmm. And this is for a long-term thing, and to get that dividend up to a nicer size. And I really do believe in the company too. I believe in the country, but I also believe in the Ford Motor Company. I was always impressed with them because they never took the bailout from 2008.
Exactly.
They kind of stood on their own. And now with American manufacturing, provided the country still goes this way after November, American manufacturing is going to have a big comeback. And I think they're going to be at the forefront of it. So provided all that, Ford could be a $20, $30 stock by next year. And so I definitely want to keep shoveling money into that. My kill, Northern Dynasty Materials. This is another one and that is stock ticker NAK. For those of you who are listening on the podcast, Spotify, Google, Apple Podcasts, wherever you're at. Northern Dynasty Materials, I'm actually just a little bit above. I made 16 cents on my total investment. So I might actually go ahead and sell this tomorrow, sitting at $1.41 a shares. I thought it'd be a good buy. It was a dollar stock, in that dollar range, and they do gold and copper mines. But there's just been no performance there. And as long as I'm not losing money on it, I might as well reallocate that $30 to something else.
Yeah. And it's heartbreaking because we like gold and silver as an investment, so we want to buy the mines too, so
Yeah.
it's a bummer that it's not giving us a return we want on
Well,
there.
I think this is a Canadian mine, and they might even still be on some sort of shutdown. So that's the thing. That's why a lot of the mining stocks haven't been producing as much as you think. It's because a lot of them are just now starting to open back up again. So this might be worth it to hold on to it, but I don't know. I'll see what it does this week. If it actually makes a couple of bucks, I think I'll go ahead and sell it, and then maybe I'll be wrong. Maybe long term it'll be a big stock, but just as far as it's been on my kill list for a week. It's just been more like I don't want to lose money on it. So
I hear you there.
So how about yours? How are your date Mary kills doing?
Let's see. My date is plug, PLUG. That one, last week it actually worked out pretty well. As like a perfect date scenario. I bought it for $4.99 a share, and then I ended up selling it. Same day for $5.26 a share. So I made a little bit on it. Nothing too crazy, but it seems like I should have held on to it. It's up to $5.44.
Yeah, we got PLUG up. Plug's one of those that I pull for because that was my free stock when I joined Robinhood. So I just get to kind of watch that. That's $5.44 of free money.
Yeah, I should have held on to it. I've been getting a little shy about different stocks and everything. So unless it has like a good dividend yield, I'm like, I should sell this while it's up, So I've been trying to do that, kind of rein in some of my stocks. I still want to diversify, but I want it to be diversified along, something that'll pay out some dividends.
I'm trying to think. I'm trying to think about what's going to stand the test of time. Of course, the blue chips
exactly
are going to certain asset mineral classes like gold and silver stocks and trusts that work with those, and then other commodities like I'm sure oil. I mean, oil's had a little bit of a resurgence, but if we ended up having another second bath of CV19, they could take another dip again because nobody's driving, nobody's using it. So our stockpiles add up and the price goes down. So, but things of that nature, no matter what happens to the economy, they're still going to be around in some fashion.
Exactly.
But fly-by-night companies that you don't know really what they're about, like, and Genius Brands isn't a fly-by-night, but I just checked. It's like $3.73.
Oh yeah.
So it's a good thing it's a good thing we got out of that one. We still got to come back to it in a month and see, was it really the genius mistake? Maybe they'll prove us wrong too, but I don't think so.
Exactly. Let's see. And then for my Mary, I picked Ford, not the Ford company, but FORD. Ironically, one time I was looking for Ford. Ford Motor Company is actually so old that their stock symbol's just F.
Yeah.
So, but if you type in Ford, it comes up Ford Industries. This one, it's weird. Like when I was looking for Ford, I found this one. It was like $1.06 when I bought it. So I'm like, heck, I'll buy it.
Not bad.
Yeah, and it's always been in the green for me. I don't think it's ever been below $1.06. So I don't know if I just timed it out right where I got it, like the lowest I could. But it's a nice little stock. I keep on thinking about selling it because, it doesn't really have a dividend yield.
Dude, I don't know. Its 3-month gross is 32%.
Yeah. So I figure like, maybe I'll just keep it. I mean, it's never gone down since I had it. Like it's never went below what I paid for it, and it steadily pretty much goes up. It doesn't really like dip down too far.
Do you know anything about the company? How long they've been around? What they do?
No, I just bought it on a whim. It was like around $1 when I bought it, so I'm like, heck, I'll buy some shares of it, see what happens, and it turned out to be a nice little stock. It's probably like a good little growth stock, I think. I don't know what it'll do in the future, but I'm like, heck, right now I'm just kind of holding on to it, seeing where it goes. I think if it falls too far, maybe I'll sell it, but so far I've been really pleased with it.
Here's the definition of this company from Yahoo Finance. Forward Industries, together with its subsidies, designs, markets, and distributes carry and protective solutions primarily for handheld electronic devices. It provides carrying cases, other accessories for medical monitoring, diagnostic kits, other portable electronics and non-electronic products, such as sporting and recreational products, barcode scanners, smartphone GPS location devices, tablets, firearms,
nice,
and other products. So they make cases.
Yeah.
And they supply a wide range of industries. So I think I might put this on my watch list too. I mean,
cool.
looking at this growth rate for it, and that's all the major industries need cases.
Yeah. Yeah.
So maybe this will be a good. Maybe I'll move out of NAC and move into Forward Industries.
Cool. Yeah, hopefully it's been a nice little stock for me, but I bought it when it was crazy cheap, so hopefully it just keeps growing.
Yeah. Okay. So what else you got?
And then for my kill, Moderna. This was one. It was right during COVID. Everyone's like, predicting it's going to go up, and it did go up. I think I bought it around 70 a share, and then it went up. I'm like, and then it, like, right after it went up, it dropped like crazy.
So that's a ticker symbol mRNA.
Yeah. Okay. Yeah, it's forever burned into my memory because of the hit I took on this.
Get that tattooed. Oh, Moderna.
Yeah. So I bought it around 70. It's been down forever. This week it got up to where it was around 63.30, and I'm like, I'm just gonna accept the loss on it. So I lost about $6 and some change per share. Finally sold it before it went down anymore. Now that I sold it, it'll probably go up to 100 a share. But for this week, this was my kill.
Yeah, $64 and a penny right now. Healthcare, life sciences seems to be one of the most volatile things because that's what keeps getting us hurt.
Mm-hmm.
Is the healthcare and life sciences when we get into it. Because I had Sorrento Therapeutics for a little while. Didn't really know too much about them. I think it was a cancer drug place, but that was a loss. And there was another one there that I was into too. But I think for the most part, I'm just going to stay out of most medical stocks unless it's like GlaxoSmithKline or Pfizer, a blue chip one. And some of these other ones seem like they come and go if they're not real big movers. Okay, so one thing, we covered those. There was an interesting video that I had shared with you, TJ, from my buddy Meet Kevin. Now, if you guys are doing your own research, I highly recommend the YouTuber Meet Kevin. He's a big real estate guy, owns multiple types of businesses, and he's a real estate investor as well as a real estate developer. There's a really cool video where he buys a foreclosure house that was a hoarder house and has to empty it out, and he does a whole little kind of synopsis of that process and then recaps the money he made off renovating it and getting a tenant in there and whatnot.
Nice. But that's a good side hustle too.
Yeah, it's a really good side hustle. It's something to think about as you grow your capital. Maybe think about getting into some real estate development at some point. But anyway, he's got, and when I saw this headline, it's just like scared to death of me. It's like, danger to all Robinhood users, big risk coming.
And we're like, no.
Yeah, that's very clickbaity. But, in this day and age, you kind of have to have a little bit of a clickbaity headline to get people interested. So we're not going to play anything from his video because I don't want to get any sort of strikes or anything. But I am going to leave a link to it in the description on the YouTube page so you can check it out. Because if you're like us and you use Robinhood, this is something that I think you want to keep in mind. Now, the gist of the video, if I had to say and make it into a succinct thing, is I think us Robinhood users are creating our own bubbles. And what I mean by that is we're creating our own excitement for stocks based on the trending tab. And if you're not familiar with Robinhood, when you go into, I'll bring my Robinhood screen up here. When you go into your news, you'll see top movers here. And it'll show the top movers that have really grown. And it'll show, movers that have fallen the most, like Genius Brands down 19.69%.
Just keep pouring salt on it.
We'll just keep pouring salt on those people. Nikola is one that he actually has in the video where he talks about them, touches on them. And then the big one was Hertz Rent-A-Car. Now, the thing about Hertz Rent-A-Car, and if we bring it up on, let's see, what is Hertz? H-E-Z. We'll bring up Hertz on the stock ticker. Hertz is currently trading at $1.87. This is like, they look like they might get delisted. But at one point, though, not too long ago, like last week, Hertz was up 30-40%. It was one of the top movers. Once it had the top mover status, there was a huge influx of people buying the Hertz stock. And this is 30% of them were Robinhood account holders. So what's going on is we're seeing this pop up in the trending thing, and I'm guilty of this myself. There's a few companies here that I'm invested in still. I wouldn't know they existed without the trending tab. But if you don't do your homework, you're going to end up losing big, and that's what he was trying to point out, because he was looking at Hertz as an example. He pulls up data on Hertz from other locations that give you more information, because Robinhood doesn't give us all the ins and outs of the information, all the technical stuff. It kind of makes it more succinct and says, yeah, I'd buy this, or no, I wouldn't buy this. They give you a percentage of who would buy and who wouldn't buy. And you kind of make your information from there. Well, if you'd have bought in Hertz early at like $2 and something, wrote it up and not sold it, now you would have lost a bunch of money, because they're in bankruptcy. They're about ready to reissue $1 billion worth of stock. And those are all not good things for a company. None of it sounds financially, fiscally sound. So the problem is, we get excited. We say, oh, hey, this stock's growing. I'm going to throw some money in there and catch the wave. But then if you don't stay on top of it, or if you're, heaven forbid, trying to experiment with options and you short, you would have wanted to short Hertz. But if you would like buy in what the opposite of short is, you think the stock's going to go up because you keep seeing the wave rise. So you buy it for a potential upside. It crashes like this, then you're going to be out even more money, because you're going to pay for the option on top of the loss that you're hitting. And then we're going to look at the chart here. So you got Hertz back in March at $8.21, and then it goes down to $5, goes down to $4. Tanks down to 55 cents. This was
oh man,
the 26th of May. That might have been when they declared the bankruptcy. I'm not too sure. But then it climbs back up again. Now 6.8. That's when it popped up as having marvelous gains. It goes from $1.55, and then on 6.8 it goes up to $5.53. That's when we were seeing it in Robinhood as this 35% gain or 55% gain or whatever it was. And now it's crashed back down to $1.87. So I just want to make you aware of this video. I hope you will watch it. Check it out. If you use Robinhood like we do, if you're not buying what you know, like something like Ford, for example, do research on the companies. Even with Ford, do research on, whatever it is, and try to learn if they're a stable, sound company or not. Because honestly, with Hertz's bankruptcy, them trying to reissue new stocks, and what they're doing is they got approval to release $1 billion of new stock. They're trying to fund their operations by selling more stock in the company. They're not fiscally able to maintain now. What makes you think they're going to be fiscally able to maintain fiscally in the future? And if we were to compare it to their main competition, which is the one that I use, see if I can find Enterprise Rent-A-Car. Pretty sure that they are maybe they're not on, maybe they're not actually listed.
That is true, though. Always buy what you know. And like with Robinhood, I kind of got burned. One time it suggested Rocket Pharmaceuticals. It was like 100% buy. I'm like, oh man, 100% buy. I almost never see that. So I bought some shares of that. Ended up losing around 77 cents per share. I just sold it yesterday, a matter of fact, because it was down for so long. I bought it, and then for a while it was down like $3 a share. It finally went back up to where I was only down 77 cents, and it just goes to show, kind of do your due diligence and research everything. And just because like Robinhood says to buy something, don't automatically say yeah and then buy a bunch of shares.
Okay, so I guess Enterprise might be a private company. I don't think they're listed. But I found Avis Budget Group, which is another one that I use from airports. Their stock is $27.99. Their price change of $1. It's also a D-list stock, but there's more value there. According to June 16th, it's up 6.6%. That's a more healthy company than what Hertz is. So at the very least, compare similar companies. If something looks too good to be true, it probably is. And you can compare competition and see if the market they're playing in is healthy, which we know the rental car market isn't, because people aren't traveling, because we're just now getting back to normal. But once that starts happening, that's another reason why a lot of the airlines, like I own one share now of Southwest Airlines. Southwest is virtually the only airline that I fly. A lot of the airlines during the crash and then the subsequent dip really took a loss, but I didn't buy Southwest on that big dip, because I got it in April. So I didn't get a chance to buy it in March. Southwest recovered quicker than all the other companies because they're just a better managed company. Their balance sheets are better. They have better brand with the public. They don't have the reputation like United for beating the crap out of people, or things of that nature. So, if you really don't know the company that you're looking at, then do some due diligence. Like I said, we're not financial advisors on this show at all. So please consult with one before you start making any sort of investments, because you could get burned. And we have a story about that too as well. So I sent, this was a Zero Hedge article, and this is one of those articles that the news comes from Twitter posts. So take it as a grain of salt. But we have a guy here, again, this is another Robinhooder, and his, let's see, was it his brother or his brother-in-law?
I think it was his brother-in-law.
Yeah, a member of his family anyway. 20-year-old guy, just got turned on to trading. Didn't really know what he was doing. Thought he was not buying stock and selling it on margin, but he was. And he ended up having a $700,000 bill from Robinhood, and he took his life. So this is one of those things where you really need to, like, I'm not doing any options trading. I'm not buying anything on margin. And correct me if I'm wrong, TJ, margins where you borrow money to buy stocks?
Yeah. I'll read you. I looked up Investopedia because I was familiar with the term. Back in the day, there was a Saved by the Bell episode where they're in junior high, where they learn about margins. Because they do the same thing. They buy a bunch of stocks on, like it was like potato stocks on margin, and end up losing a bunch of money. But yeah, the Investopia or Investopedia definition is it's borrowing money from a broker in order to purchase stock. It allows you to buy more stock than you'd be able to normally. So basically, you're borrowing money to buy stocks, which you shouldn't do. Like it's like borrowing money to gamble, you know?
Mm-hmm. Yeah, definitely. So, in the title of the article, family tragedy, as if finance is not worth losing your life over. And that's absolutely true. So, again, take this story on face value because it is one of those aggregated stories. It's put together from stuff floating around on Twitter. He made the guy, his Twitter handle is @BillBrewsterSCG. And this was the series of posts that kind of laid out this story of a family member taking their own life because they ran up this big debt on margin calls and they had no idea what they were doing. He thought the account was set to no margin, but that was incorrect. So that's another thing that we definitely want to point out here is that don't wade into deeper water than you're able to tread. If you want to try options, and this is the thing I'm considering for myself, there are platforms where you can just play with fake money to practice. Educational tools for younger kids, for young adults, where you're not actually using your money, but you're trying these things out and seeing if you can learn. It's a learning tools. So these would be good options to look into if you want to get serious about doing any kind of day trading, options trading, anything of that nature. I'm really more of buy something I know, put money into it because it's earning a larger return than a savings account would be. But then I also want to put stuff in metals, crypto, etc., and kind of have not all eggs in one basket,
Exactly.
but really diversify not just my portfolio and my Robinhood account, but diversify the other things that I'm doing. And so anyway, that's all I've got for this article. I don't know, TJ, if you had anything else you wanted to say about it.
No, just make sure you're not borrowing money to buy stocks, and don't buy more than what you can afford. I guess would be the best advice. Make sure all the bills are getting paid, and don't leverage your bill. Like, don't buy a bunch of growth stocks, thinking, "Oh, I'll buy these, grow it, and then pay my rent or mortgage." Like, make sure the bills are paid first.
Yeah, absolutely. And that was a big thing that Ryan had to say on yesterday's episode. It was all about, working hard, do the grind, earn the money, and then be smart about it. Tell yourself no. Retrain new habits where you don't have to go out to eat. You don't have to buy that new pair of sneakers. You can buy something used, buy used cars, and then take that savings that you wouldn't otherwise have and invest it in smartly. And if you really don't want to start picking stocks, Acorns is a good way of doing that. And you can set it and forget it and let your money grow. Or you can go the full route, which I'm thinking about doing, and setting up the IRA and getting that tungsten check card and use it as a spend account as well. But and I don't really have any other picks. Do you have any picks that you're looking at? Because I'm thinking that this week is going to be pretty much kind of like the end of today, where the stock market's not going to go super high or super low. This is just my guess. I don't get paid until later on this week. So I think I'm just going to set some money in my account aside and wait for the next dip. What are you thinking about?
Pretty much the same thing. This week, it seems like a lot of the stocks are on the mend and kind of going up. So I'm kind of keeping an eye on a few things where I'm like, I should probably like I'm not too attached to these. They're not a crazy growth stock where I'm making a lot of money on it. And also, like I have a few that aren't paying any dividends, so I'm kind of keeping an eye on them. Once they get to a certain amount of profit, I'll probably drop those. A lot of the other stuff is still kind of in the red from last week, so I'm keeping an eye on those as well.
Mhm.
And I think we were talking about it earlier online, and we're kind of thinking next week is going to be a down week. So I have some money in my Robinhood account that I haven't used to buy any stocks. So I'm thinking next week, if it takes a dip down again, I'm probably going to buy a lot on the dip next week.
Yeah, some of the ones I'm kind of looking at maybe next week is getting a share of Spotify, because we are on the Spotify network and I do want to support them.
Mhm.
But I do not want to get it above 200. If it takes another dip into 170 territory,
Oh, yeah.
180, I think I'll buy half a share or maybe a full share of them. Also, just put more money into Ford, putting more money into NVIDIA, and then some of my other goals like getting one whole share of Netflix, and then adding more money into Amazon, because Amazon's basically like financial gold, like retail gold, because the stock continues to appreciate. It's over 2,600 right now, and I think if it especially had any more dip, I'd probably put more money in that as well, and then maybe within 5 years I own one share of it. I don't know. This is just kind of things I keep in my head, because I'm looking at these various companies and saying these are growing really well. Why should I risk it on these other cheaper stocks when with the micro investing I can just kind of keep socking away a little bit here, a little bit there of these other companies that are providing a dividend or providing significant percentages in growth, and kind of ride that wave. I know Tesla is one. They skyrocket above 1,000, and then the market overlords came in and said, whoa, this is a little overvalued, and it dropped down into 900 again. I think it's in the 900s right now. But that's another one, depending on their partnerships, depending on what they're doing with SpaceX and Tesla Motors. If they're going to compete with Nikola, which is supposed to be trying to compete with them, you may have a bull run in the electronic car segment. So it might be good to go. Anyway, that's kind of what I'm seeing. Again, this has just kind of been a special episode. I think we're going to stick to Mondays and Saturdays for a schedule. But if something does pop up, it's nice to know that we're available and we can just kind of jump right on it and give our 2 cents for those who are enjoying these pennies of thought that we are sharing. TJ, you got anything else?
I just wanted to add part of the reasoning for doing the special was because we heard about the article about the guy that was buying on margin and committed suicide. So we figured it's something we wanted to address as soon as we could, for any of our listeners to kind of keep them from getting into the same type of situation. So it's something we wanted to address. So we figured we'd kind of do a special on it to get it out there, so that we love all of our listeners and we don't want to lose any of you guys. So
yeah, absolutely.
You know what I mean? Yeah, we gotta let you know about some of the dangers out there.
So again, I'm going to have links to the YouTube video of Meet Kevin talking about the Robinhood bubble scenario, and then I'll also link that Zero Hedge article for those of you who want to read it on your own in the description on the YouTube channel. Again, this is Broke Money Hustle on YouTube, Broke Money Hustle on Facebook. You can follow us on Twitter as well. We are at Broke Money on Twitter. And we have an Instagram too.
Yeah.
Cool. What's the Instagram?
Broke Money Hustlers. I've been posting some of our definitions and everything. I've been creating memes of those and posting them onto Instagram. And then as long as the link is working correctly, they should be posting on Twitter as well.
Awesome. That's awesome. That's cool. Yeah, and we want to thank everybody who's joining us on the Anchor Network, on Indie Volt Radio. We will be broadcasting on Indie Volt Radio here soon. And we want to thank everyone who subscribes to us on whatever platform, whether it's Spotify, which we love, or if it's Apple Podcasts or Google Podcasts, wherever you get your podcasts. We're all over we're on 6 different platforms now, I think. So That's great. We just hope that you're enjoying this content. And please show up when we're live on Mondays at 5:30 or Saturdays at 11. We'd love to have your questions in the comments that we can stumble and fall over. And if you're somebody who has a side hustle that you really enjoy, you're successful at, if you've got some great stories of your investments, what you've been doing, how you're saving money, how you're pulling yourself up by your own bootstraps, so to speak, we'd love to hear from you. So you can reach out on a direct message or in the comments, and we'll look on maybe having you on as a guest in the future. Coming up on the next episode, we are talking cryptocurrency with my man Mike Miller, who owns quite a lot of Bitcoin, and he's into some other things too. I'm into crypto on a small scale, so it'll be interesting to help learn a little bit more about that, because it is an asset class. The big boys, the banks, the central bankers, they are in on it, even if they're telling you they're not. Hunt around on the internet, you'll find some articles about so-and-so having deals with so-and-so, and then publicly they're saying, no, that's not a good investment for you. That's because they're buying it all up for themselves firsthand right now. So again, my name is Eric, and great to have my co-host TJ here. And this has been Broke Money Hustle. We will see you on the next episode.
This is Broke Money Hustle. And now here's Broke Money Hustle with Trico and Eric.